In today's session, I'm going to explain about three types of document splitting. Sorry, Jagadish, are you speaking? I could not able to understand. Okay. So, okay. First example, I'm going to work for active splitting. Active splitting means I have two line items in one document. First line item, I'm giving profit center. It has to split to the second line item automatically. That is active splitting. So before that, make sure your document splitting is active or not. I have activated my document splitting. Now first one, active splitting F-02. What is our company code? A450 is our company code. So today's date, A450, currency INR, posting key, rent account, amount is 1 lakh rupees, cost center 1010, profit center will be taken automatically from the cost center. So once again, I no need to give the profit center here. Active splitting 50, 100, 200. This is the rent outstanding account, GL account. Enter amount. I will even copy the text. As per the document splitting, profit center is mandatory for all the line items, but I am not activating for second line item. It has to come automatically through active splitting. Enter. Just click on overview button. Click on simulate and also click on document simulate. Okay. Now you can see your profit centers, which is coming to the I think it is coming to the second line item as well. Okay. For more clarity, I will post and I'll show you how it is. Go back. I'll try to post a document. After posting, display the document. Now this is the entry view. First one is entry view. This is what we have entered. Next one is go to general ledger view. So next one is general ledger view. If you see the general ledger view, your profit center has been activated for second line item and your segment is also coming for second line. Okay, so this is example for active splitting. Clear? Now go back. Second scenario. Passive splitting. So it is used at the time of clearing. At the time of clearing, system will use passive splitting. At the time of posting, active splitting. At the time of clearing. Clearing means now I will be using GL account F-07. Rent payment is a clearing, right? Rent outstanding means I kept it in the clearing account. From clearing account, I am making payment to the bank. F-07, F-53, or vendor payments, customer payments, all clearing. Okay. Now, during clearing, I'll be using F-47. So this is the document. If we are clearing, we will not clear rent account. We will clear rent outstanding account because rent outstanding is an open item and we are clearing rent outstanding account. But there is no profit center in the rent outstanding account. At the time of rent outstanding account, we did not enter the profit center. It came through document splitting. So now when you are making clearing this line item, do we need to give the profit center or system will take it automatically? But we did not enter at the time of entering the document. At the time of entry view, there is no profit center. Only at the time of splitting, there is a profit center. Okay. So now let me show you whether system will take profit center or not. That is called passive splitting. Go to create session, one more session, F-07. Bank account, 1 lakh rupees. Here is the profit center. We have to enter profit for any document. Profit center is mandatory for both the line items. But here I am not giving profit center. Okay. Previously, at least for one line item, we have to give profit center. Here I am not at all giving profit center. Now see, let us see how system will behave. Okay. Overview, simulate, and you can even go to the simulate general ledger. During general ledger, your profit center is coming automatically. I did not enter profit center for any of the line item during payment, but system is taking profit center from the original line item. From the active splitting, system has taken profit center for the second line item. During clearing, from active splitting, system is taking profit center for the payment documents. Okay, I'll try to post. Let me post document display. So there is no profit center at the time of entry view, but at the time of general ledger view, there is a profit center. This is how we need to understand passive splitting. Active means at the time of posting. Passive means at the time of clearing, system will take the profit center from original line. Okay. Now zero balance. What is zero balance splitting? I'll show you. It's the same example. 17/11/2023. Sorry. F-0. It's not at the time of clearing. It's again at the time of posting. I'll show you, then I'll write it in the Excel. 17/11/2023. Zero balance splitting. Rent account, 1 lakh rupees. Cost center. This belongs to 1000 profit center. Okay. Now, $50, $100, $200, enter amount, profit center. I'm entering another profit center here. Debit line item, one profit center. Credit line item, one profit center. Okay. As per document splitting rule, even at characteristic level, that means profit center level also, your debit balance and credit balance should be same, should be equal. As per accounting rule, debit balance should be equal to the credit balance. This is the basic thumb rule. If debit is 10,000, credit also should be 10,000. This is the thumb rule at GL level. Now, once you activate document splitting, even at profit center level, debit balance and credit balance should be equal. But now at entry time, I'm not making equal. Debit balance is for one profit center, say credit balance is for another profit center. Now let me post. You can even display at the time of simulate general ledger. Okay, let me post. This is not correct. Just give me a second. Someone has removed this setting. Okay, so let me keep this setting once again and then try to do same configure, same scenario, zero balance splitting. Okay, I have activated. Now F-02 zero balance splitting, rent account, amount, cost center, rent outstanding account, amount, profit center will be different. Now let us see whether system is using zero balance splitting or not. Once you activate any functionality, system will take some time for compiling. After compiling, this is the accounting name. I'll explain you after posting the document. Okay. So let me go back. So now I'll post this document. Display. This is the normal entry view. This is what we have posted. Now go to general ledger view. In general ledger view, First two line items is what we have posted. Second two line items is what it is coming automatically. Why it is coming automatically? Because as per document splitting, character wise, my debit balance and credit balance should be equal. Now select the profit center, go to filter. I'll take one profit center. Now my debit balance and credit balance at profit center level, it is equal. Okay. Now I'll take one more profit center. Even now, my debit balance and credit balance are equal for second profit center. This is the functionalities of zero balance splitting. Zero balance splitting will help us to balance debit and credit at characteristic level or profit center. Characteristic level means we have activated only one character, that is profit center. Okay. And finally, the balances in zero balance account will be zero. Always your zero balance account will be zero. GL account balance is zero. Zero balance account 100 450. It's always zero because it's a zero balance account. It's just used for balancing at profit center. If you don't understand, try to do this scenario with the same examples, and then you can able to understand this. Clear? 1 minute. Call from office. Okay, team. This is the main differences between active splitting, passive splitting, zero balance splitting. Okay. So I'll write here. Third one is zero balance splitting. We use for making debit and credit balance equal at characteristic level. Characteristic we have activated profit center. If you activate business area, then at business area level also it should be equal. Okay. Generally, old clients, they might have activated business area. New clients, they will not activate business area. They will activate only profit center. And one more important thing, these profits and these document splitting is a part of new GL accounting. SAP has introduced new GL concepts previously 10 years ago, I guess. So then they have activated this functionality, document splitting functionality. And these document splitting is mandatory, and by default it will be activated for all the clients. మీరు ఏ క్లయింట్ వర్క్ చేసిన డాక్యుమెంట్ స్ప్లిట్టింగ్ అనేది యాక్టివేషన్ లోనే ఉంటుంది. మోస్ట్ ఆఫ్ ద కేసెస్ 99.9 cases document splitting will be activated at profit center level. Okay, by default. So any questions here? Active splitting, passive splitting, zero balance splitting. No questions. Okay. This is the example. Now let us go to exchange rates. Let us go to exchange rates. Exchange rate means when we are purchasing from foreign currencies, non-Indian currencies. So system should convert the value from non-INR to INR. Okay, because our local currency is INR. Our reporting currency is only INR. Okay, but even though I'm reporting in INR, I can do business with any other foreign currencies, right? I can go to Japan and I can buy. I can go to China and I can buy the raw materials. I can go to Germany. I can go to US. Wherever I want to buy, I can buy it. Okay, depends upon the quality. Not only raw materials, even for services. I can deploy services from other countries as well. So what is the configuration, standard configuration for this? I'll try to deactivate document splitting. Not required. If you activate document splitting, others will not able to do their transactions. Okay. Activate, do your process and deactivate. Okay. Next one. SPRO ING for currencies. Okay. So first thing, set decimal places for currency. We should not do this. I'm just explaining. So by default, SAP will be giving you the decimal places. For INR, how many should be the decimals? 0.00 should be the decimal. We no need to do this. We should not even do this in the real-time environment. It will be taken care by basis team or by default settings. Okay. Sometimes some currencies, they will maintain 3 decimals, 4 decimals. But in India, by default, we are using 2 decimals. So it's not maintained here. Okay. So in case for India INR, if you want to maintain 3 decimals, then you can come and change the decimal places here. Okay. I got one live issue, I think 5-6 years ago when I was working for Qatar, not Qatar, Middle East, like Abu Dhabi, I think so. That is where the client is there. So what happens? What happened? One of the junior consultant. So what he did, we are using 2 decimals example, but he changed it as a 3 decimal, and it was deployed to the production system. What happened? Till now, all the values has been mistake. Whatever the values I have posted, it was posted in the system. So it was converted into 3 decimals. That means 10,000 has become 1,000 rupees. 1,000 rupees has become 100 rupees. It really happened. Okay. So we got a very big escalation from the client. Okay, it will not, nobody will accept this kind of things, right? So immediately we checked the configuration and we found that we checked the transport request. What is the recent transport request? Move to production. We have taken the transport request. In the transport request, we observed that there is a currency configuration. So immediately we came to this part and we have reverted from previous configurations to current configurations. Okay, and then we saved it. Immediately we deployed the transport request to production system. After changing one more transport request, we deploy. Then the values is as per previous, as per the client expectation. But if it's a normal client, they will accept it. But in case of any big clients or MNC or they will not accept. They will even change the implementation partner or support team. Suppose Wipro has done this mistake. Next time they won't give project to Wipro. They'll go to Accenture. Okay. So why they will say that simple issue you could not able to handle, your team is not capable. Okay. So we are not going to give this project to. This will lead to termination as well. So అంత దూరం వెళ్ళదు, but telling you the criticality. మొత్తం ఫైనాన్షియల్ స్టేట్మెంట్ మారిపోయిందంటే దే విల్ నాట్ యాక్సెప్ట్. So this is one issue I faced very long. Okay. But if you want to tell in interview, you can tell that this was happened, but not in production. Development lo jarigindi, rectify చేసిన చెప్పి. Okay. So go back. We no need to do anything here, just to show that I came here. That's it. So before, okay, after implementation we should not do this. Before implementation, while starting the project itself, if you know that we need 3 decimals, we can do this. Okay. After implementation, after posting transactions, we should not do these changes. If anybody asks you, my client required to change the decimals after middle of the year, is it possible? You say that no. Once the document is posted, if you change the decimals, that will reflect your previous documents also that you have. Okay. So nothing here. Now go to exchange rate types. First configuration is exchange rate types. What is the T code? OB07. What is exchange rate types? Normally, SAP, normally, I'll not take SAP, I'll take general sense. I went to Qatar. Okay. So when I went to Qatar, we will be taking INR and we will be converting into Qatar currency. Okay. So while converting, they will give us some value. Again, if I give Qatar currency and if I ask Indian currency, there will be some differences. I gave 10,000 rupees, they gave me some dollars, Qatar currency. Again, I have given that currency to them. I asked it 10,000. They did not give 10,000. They have given only 9,000 something. Because when there is a difference between bank buying and bank selling. Okay. So you can create your own exchange rate types in SAP. Normally, we no need to create. We have standard exchange rate types. We'll use them. One is M. M is for average rate. Second one, B. B is for bank selling rate. Next, one more, G. G is for bank buying rate. Okay. So these are the three standard exchange rate types that we use in the real time. But majority of the cases, we will not use B and G. We'll use only average. For purchase, we use M. For sales also, we use M. But in case, if you want to use B for purchase, G for sales also, you can use it. How to use? How system will understand whether you have to use M, whether you have to use B, whether you have to use G. How system will understand? Maintain exchange rate type in document. The configuration is OBS7. You already know these document types. So in the document type, OBA7, okay, any document type, you can take any document type. In the document type, you have like default value exchange rate type. Suppose if I want to use B, I can use. If I want to use G, I can use. If it is a default, then system will consider M. You can maintain M, or if you keep blank also, system will take M1. Default one will be average M. Okay. Or I'll go to general transaction, SA. In SA, somebody has maintained different exchange rate times. I am going to maintain M here. I'm going to maintain M. Same. Go back. Now go back from this transaction. Translation ratio. This is by default, it would have maintained. If it is not maintained, then you have to maintain. What is translation ratio? Just third one. Define translation ratio. OBBS is the T code. Translation ratio is always 1:2. Suppose exchange rate type M from INR to USD, it is 1:2. Ratio will be 1:1. 1:1 means 1 INR is equal to 1 USD as per ratio. Rate is different. This is ratio. Ratio means 1:1. It's a standard configuration. Okay, go back. Now, important thing is exchange rates. Fourth one, exchange rates. Important T code OB08. Here, I will maintain exchange rates as on today, new entries. M is exchange rate type, valid from today. From INR to USD, $80. 80 INR is equal to 1 USD, or I'll maintain 83. 1 INR is equal to 83 INR is equal to $1. Okay, let me save. I'll try to post a transaction F-02 17.11.2023 USD. Okay, so this is the posting fee. Amount is $100. Cost center, it is taking 81. It should take 83, right? Why it is taking 81? We have to cross verify. Okay. It was a small mistake. M valid from USD to IN. I have given reverse. It should be like this. USD to IN. 1 USD is equal to 83 IN. 1 USD is equal to 83 IN. We are converting from USD to IN. Okay, just a second. I'll go back. F-02 USD rent account $100 is equal to, give the cost center 83 IN. Okay, this is one way of maintaining the exchange rates. There is one more way. What is that one more way? So USD to INR, this is 83.28 is today's rate. Now INR to USD, this is 0.012. I'll maintain this value under indirect port. I'll remove this direct. Okay. Now let us see how it will calibrate. F-02 USD rent account. Enter. So now the value will be $1,000. 1010. This is the value. There is no direct quotation. There is an indirect quotation. So you can use either direct quotation or indirect quotation. So this is the examples for direct quotation and indirect quotation. And you may ask me one question. So it's coming automatically. I want to change manually. Is it possible to change the exchange rate manually? Yes, you can change it here. You can change it manually. Okay. Or one more option, go to F-02. You can maintain the rate here itself. USD rate is USD rate is $85. So system will take rate as on your screen. 17.11.2023. 10,000 or $1,000. 1010. It is taking as per your header. So options are, it will come automatically from the document type, or You can enter manually the rate at the time of document posting, or you can even change manually during this conversion. Okay, this is about exchange maintenance. Okay, so that's it, team. So from Monday, we'll start working on accounts receivable. We'll start working on account receivables and O2Cs. Okay, thank you so much.